How to best prepare for the coming recession. What's up, viewers? All good and fine? Very well. Though some of you are looking a little worried. What's the matter? Let me guess. War? Recession? Gotcha. Yeah, quite a period we're getting through lately. The first shock to the planet was a pandemic. As a result, there was a 3-month-long economic downturn, with people being quarantined all over the world. When September 2020 rolled around, COVID started to dilute a bit, and the globe was about to heave a sigh of maskless relief. In the meantime, Russia decided to invade Ukraine and provoked a war, throwing markets throughout the world into a tailspin once more. The COVID pandemic caused worldwide inflation to reach highs not seen in nearly 50 years, with inflation in the US reaching 8.58%, a high last seen in 1981. But it's just the beginning. Things went worse in successive days. So what went wrong? Is the recession at our doorstep? And if so, how to get prepared for this? The dubious increase in inflation is mostly caused by rising food and energy prices as a result of the COVID-19 pandemic's impact on both industries. Food prices rose by 12.6%. Just in February and March of this year, inflation reached its highest level since 1990. Due to the battle in Ukraine, wheat and other grains were particularly damaged. As an aftermath of the conflict and a Russian blockade on Ukrainian shipping, both Russia and Ukraine, which produces a significant portion of the world's wheat and other commodities, increased price by 17.9%. Moreover, Russian soldiers burned or mined Ukrainian farmers' crops, and the remaining wheat was either taken by Russian soldiers or blocked by Russian ships in the Black Sea. There has been a rising endeavor in the West for Ukrainian trade convoys to be accompanied by NATO warships to break past Russian blockades. Because the situation was becoming so dire, especially for impoverished African countries, that they were at risk of an impending famine. The Russians were forced to make a decision that would have serious repercussions. Either take on the stronger NATO ships and escalate the conflict, or permit the export of Ukrainian grain, removing the threat to African countries and bringing down food prices globally. This historically high inflation has also been fueled by the company's insatiable demand. Beginning in late 2021, lockdowns and quarantines were lifted, and millions of people flooded the stores with money that they had saved up during the quarantine. Everyone was insatiably hungry for life, and as a result, costs have also increased proportionately. Last but not least, the current surge in energy cost is a result of Russia's invasion of Ukraine. All these elements come together like a perfect storm at the worst possible time, just as people were about to resume their normal lives after the outbreak. Russian oil supply got disrupted and subject to sanctions. It has caused a dramatic increase in oil prices, and the situation was made worse by OPEC countries' refusal to expand output to counteract Russia's interruption. The rising price of oil is a financial windfall for OPEC countries like Saudi Arabia, which are profiting while the rest of the world suffers. Fortunately, American President Joe Biden was successful in convincing OPEC to raise oil output, which should result in cheaper prices throughout the forthcoming summer. This was likely made possible because countries like Saudi Arabia were reminded of who provides for their national defense against enemies like Iran. So, how are you going to withstand the impending recession? First, try to relax. Don't panic. Economic downturns are temporary. Even the Great Depression ended after a few years and was followed by the most successful period in US history. Although World War II was helpful, both the Depression and this recession will eventually come to an end. You should make an effort to maintain perspective and avoid succumbing to what investors refer to as FUD, fear, uncertainty, and doubt. The typical recession lasts 11 months. Interest rates are rising over the globe as a result of rising inflation. So, loans for expensive products like houses and cars will now have higher interest rates. As a result, you pay more. Higher interest rates make customers less willing to spend money, which can lower demand for goods and drives prices back down. This is how central banks combat inflation most effectively. So, hold off purchasing a new home or automobile for the time being. Save money now and wait for the recession to end, when traditionally economic growth peaks and interest rates decline once more. Are you an investor? You must be in a great panic right now. With the S&P 500 officially entering a bear market or a 20% decline from the most recent high, traditional equities have taken a terrible battering. This causes the stock market as a whole to lose billions in value, forcing certain portfolios to implode. Given that the value of cryptocurrencies has fallen by over $1 trillion since March 2022, If you invested in them, you are undoubtedly suffering the consequences. Even Bitcoin, the biggest cryptocurrency, has lost more than $60 billion in market capitalization over the past 6 months. Many people now fear the cryptocurrency market as a result of the fall of various altcoins, most notably Terra Luna, which has only made matters worse by scaring away prospective investors. But wait, bear markets though aren't always negative for investors, if you have the patience to persevere. Remember, you don't book losses until you sell, so resist the desire to sell and take losses unless you have a good reason to think your investment is headed toward the single digits. You could be better off simply tossing your money into the trash if you invest in cryptocurrencies. Instead, it could be time to review priorities and reallocate funding. During downturn markets, investments in consumer goods, healthcare, and energy are always wise choices. These sectors are essential to the typical person and will likely experience less loss. Given their broad adoption, major coins like Bitcoin, Ethereum, and Solana are unlikely to disappear. People want to use these coins, and while they are still quite hazardous, a well-established cryptocurrency carries a lower risk than your cousin's just launched altcoin. Checking out the entire market capitalization is a fantastic approach to figuring out which coins are most likely to survive this crypto meltdown. This will reveal the type of currency that people are carrying or using. The trick during a bear market is to refrain from trying to perfectly time the market, regardless of whether you choose to invest in more risky operations like cryptocurrency or more traditional investments like equities. Stay confident that you may enter the market for a little and profit handsomely when it recovers. Stop chasing moons and Lambos, and start investing like an adult by employing the time-tested method of dollar cost averaging. Long-term game is significantly more profitable than holding on to money and trying to time the market. Paying off your credit card debt as soon as you can is the next strategy for surviving a recession. Although it could be challenging, given the rising interest rates, this is extremely vital. This implies that the total amount you end up paying will continue to rise every month. If your long-term payments are minimal, a mere percentage point in interest could result in you paying hundreds or even thousands more. So cut back on your spending and pay off your credit card debt quickly. The next thing you should do is make sure to save money. Various industries might be negatively impacted by recessions. Being out of a job and having no savings is the absolute last thing you want. To ensure that you have enough money saved for the future, it is necessary to reduce spending and tighten your belt. If you are fortunate enough to have a sizable quantity of money, now is the time to start searching for assets that can store your money, such as gold and real estate, which are historically reliable inflation and recession hedges. With home and rent prices in the US and throughout the world reaching record highs, hoarding property may now come with its own risk. Don't be shocked if social unrest and calls for government intervention cause a significant decline in the value of your real estate. Stocks suffer during recessions, but bonds are typically fairly reliable investments even during these times. However, the recession has also had an impact on bond prices. The difference between the two is that the stocks reflect a portion of the company's ownership. Therefore, if you purchase Apple shares, you now own a tiny portion of their business. However, when you buy a bond from a firm or government, you are making a loan to them. When you purchase a bond from a firm or government, you are now owed the money you spent on the bond. Additionally, for a predetermined amount of time after which the bond will be fully repaid, you will receive interest payments on the loan. Bonds are great investments for people searching for a predictable income because you are certain of receiving a fixed interest rate each year. If you invest $2,500 in a 10-year bond with a 2% interest rate, you will receive $50 every year until the bond expires after 10 years, at which point you will also receive your original $2,500, making a $500 profit. Bonds and stocks each have a unique risk-reward ratio. Investing in stocks can frequently produce noticeably better outcomes because your return rises as the company's worth does. The inverse is also true. When the value of the firm declines, so does the value of your stock. On the other hand, a bond offers a very secure return on your investment, even though that field is frequently much lower. And above all, financial literacy is crucial right now more than ever, so you can feel confident about your financial situation. Even though a recession may be a challenging period, the greatest thing you can do is start proactively preparing for it now. So, that's it for today. What do you think of this? Share your thoughts with us in the comments section below. Also, let us know in the comments if there are any specific topics you would like to see next. With that, Always remember that we're here just providing you with some information on things to help spread awareness. We don't dispense any financial advice. Always do your own research before taking any financial decision. If you find this video helpful, give it a like, and remember to subscribe to the channel and click the bell icon to get more amazing videos like this. See you soon. Thanks for watching.